So I think that this year we expect that growth will be at 5.2%, as you mentioned, driven by investment. We've seen a lot of infrastructure investment, a lot of investment in the mining sector, and that has been the key driver of growth, and that's a good quality growth because it's actually increasing the productive capacity of the economy. We see some of those dynamics continuing into next year. The first half, we think that infrastructure investment will remain relatively strong. There is still some momentum for some of this mining sector investments. And maybe after election, some of the investors that may have been on the sidelines waiting for the uncertainty to dissipate, they might actually come in. So we see investment actually even picking up a little bit from this year and keeping the growth momentum at this 5.2%, despite all of this uncertainty about the Federal Reserve, about global trade. So 5.2% is actually a relatively strong growth rate for next year.
Yeah, Frederico, during the election year, it's not really easy because we have seen how rupiah is decreasing so low, and then we can see the trade wars. And the current account deficit is one of the most crucial thing for Indonesia, microeconomy of Indonesia. What is your opinion about the current account deficit? What should we do?
Yes, so Indonesia, there's a lot of focus on the current account deficit, despite the fact that it's actually a quote-unquote good current account deficit because it's being driven by disinvestment, right? When you build infrastructure, when mining companies buy new trucks or new machines, they actually have to import a lot of capital goods, and that has been a big contributor to this current account deficit. So we don't think that the imports, which have to do with investment, are necessarily a bad thing. I think that the issue is more that exports have been very weak. Indonesia has been punching below its weights in terms of how much it has a potential to export. And similarly, how do you finance the current account deficit? Many other countries, they may have current account deficits, but they're financing it with FDI. The FDI levels in Indonesia have been quite low. So in terms of our recommendation, the focus of this particular report is how Indonesia can strengthen its external position, the structural external position, by improving exports and FDI.
Improving export, because as we know, Indonesia is most of Indonesia exports commodities is the natural resources. We need more time to giving like added value for our export commodities. Do you think that we can get that point, that target in the short term?
I think so. I think that we've seen evidence that a lot of production can move very quickly. There was the famous example with the washing machines in the US, that the US applied some tariffs to washing machines, and within 3 or 4 months, those companies moved their production facilities to Vietnam. Indonesia already has a basis for electronics production. It has a basis on footwear, on apparel. Furniture is actually one of the industries that has been targeted by tariffs. So the basis is already here. With the right policy environment, with welcoming the foreign investment, I think that there is actually an opportunity for some of these companies to move production to Indonesia actually in a very short period of time.
Yeah, it's going to be very good for our FDI. Arif?
Yeah, but the World Bank has projected that the current account deficit will be more moderate next year to 2.5% of GDP from 2.9% this year. So what's the reason for that moderate current account deficit?
So I think that the two main factors, one is that the rupiah has weakened on a year-to-year basis,
yes,
and that helps with the income balance. So that's the profit that a lot of the multinationals send out of Indonesia. We've seen that improve the current account by 0.4 percentage points in the last 4 quarters. So if the rupiah remains at about the current levels, some of that will help next year on the overall yearly current account. But very importantly, the oil prices have come down. Yes. So Indonesia being a net fuel importer, at least in the short term, the oil prices having come down as much as they have will be a plus for the current account.